Greetings once again, audience. This will be one your finance coach. We will be looking at part two. Okay, we'll be looking at part two. We are still under chapter. We are still under chapter two of the Nigerian Tax Act 2025. So we've concluded part one. That's imposition of tax on income, profit, or gain. So in this section, we are going to part two, which is called taxation of resident person. Okay, taxation of resident person. So taxation in Nigeria is not usually based on citizenship rule or something like that. It's based on residency, where you reside, where you stay. So if you're a resident in a place, you're expected to pay your tax on that resident. Either you're a resident or you're a non-resident. Okay, non-resident are those that you don't stay within that tax jurisdiction. Probably you're staying in the US, you're staying in Canada, you're staying in Ghana. But if you're staying in Nigeria, you are seen to be residents of Nigeria. So in this part, I'm looking at taxation of resident individual. Now in this section, I'll look at section 6 of the Nigerian Tax Act 2025. So section 6, subsection 1. The profit of a Nigerian company are deemed to accrue in Nigeria, whether the profit arise and whether or not the profit have been brought into Nigeria or received in Nigeria. So this section 1, subsection 1 of section 6 says that if a Nigerian company, your profit is deemed to have accrued in Nigeria because it assumes you're a resident company, also a Nigerian company incorporated in Nigeria. So that whether it's brought into Nigeria or received in Nigeria, it is due to have accrued in Nigeria. So indirectly, if you're a resident, your global income will be subjected to tax. If you're a Nigerian company, your resident company, all your income is assumed that it's accrued in Nigeria. So if you have subsidiary different branches, your global income is subject to tax. However, there's double taxation agreement between Nigeria and other nations of the world, which we'll see as we proceed. Then I want to read subsection 2 of section 6, where a foreign company which is controlled by a Nigerian company has not in a year distributed profit to its shareholder. The proportion of the profits of the controlled foreign company attributed to Nigerian company which would have been distributed without detriment to the company's business shall be construed as distributed and included in the profit of the Nigerian company for the purpose of this subsection 1. So if you this section is saying where a foreign company which is controlled by a Nigerian company has not in a year distributed profit to Nigeria, so shareholders. So if there's a foreign company but controlled by a Nigerian company, definitely the Nigerian company should take part of the profit of the foreign company to add to its own localized profits to get a global income. Okay, so but this foreign company has not distributed the dividend to the Nigerian company, probably due to one legal or any issue they're having there, and it's due. This law is giving the tax authority more power that now it is when it is due for distribution, and even though it has not been distributed, it's assumed that it has been distributed and it will be added to the income of the Nigerian company. So don't allow them delay your income so that you won't be owing the tax authorities. Then section 3, where the income tax paid by a non-resident company which is a subsidiary of a Nigerian company or a member of a multinational group of a Nigerian company in any year is less than the minimum effective tax rate prescribed by this act, the Nigerian parent company shall pay an amount to make that non-resident subsidiary income tax equal to the minimum tax rate. So if we have a non-resident, that's a company that is non-resident in Nigeria, that's a company outside Nigeria, okay, which is a subsidiary to a resident company. So this was saying that where the income tax paid by a non-resident company, which is subsidiary of a Nigerian company or member of a multinational group of a Nigerian company in any year yield less than the minimum effective tax rate prescribed by Act, the Nigerian parent company shall pay an amount to make the non-resident subsidiary tax equal to the minimum tax rate. So there's a minimum tax rate that the law, requires um, non-residents, which are subsidiary of a Nigerian company. They are subsidiary, but they are not resident. Like we have some banks, they have branches all over the world. Of course, in that they are not those branches in UK, in US. They are those branches are non-resident because they're not in Nigeria. Okay, but the money they make, okay, they are supposed to pay some kind of tax, okay, because they may not be fully owned by the Nigerian company. So, but the amount we are saying they will pay as tax must be equal to the minimum tax of 15%. So, in the case they pay less than the minimum tax, the law requires that the Nigerian parent company will pay the balance to the Nigerian Tax Authority. Okay, so we are still under taxation of resident persons. So that's section 6, subsection 1 to 3. Okay, section 4 says that the service shall provide detailed rules for the implementation of the subsection 2 and 3. Subsection 4 is not saying anything big, just telling us that the service will give rules how to make this happen. Okay, thank you for listening to these sections, and your success is our concern. Bye for now.